Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Now tonight's webinar is Forex Trading Live Market Analysis. We'll get into that in a moment. But just coming up from me this week, tomorrow I'll be going through mastering the double top and double bottom pattern. And then on Thursday, more live market analysis. So all webinars starting at 8 o'clock from me. And before we get into it, if you can all read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat there, but you're more than welcome to watch or just follow the link and join us in the webinar. So everybody, please read through the disclaimer. If you have a question, to the chat box or the question and answer box so I can see what you want to ask me. All right, I'll just give you a moment or two to read through the disclaimer. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at DXY Securities and full-time trader. I've been trading the Forex market for more than 15 years now and mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with us at the ACY website, acy.com. Go to the Market News tab, or our YouTube channel, ACY Securities Australia. You can connect me in person on Twitter and LinkedIn there through the week. And we have our Telegram channel, ACY Securities. If you'd like to get connected with that, just contact Nathan.bray. He'll be only too happy to help you out. And if you want to get access to my chartlets and templates, the ones I'm using in my webinars, then just contact Nathan. He'll be able to set you up. So I'll just put his details in the chat for you. If you need a demo account setting up, he can do that for you too. Or if you've got a question about a live account, he'll be able to answer anything you have. All right, so let's get into tonight's analysis. Now, there's a few or a number of news items coming out. So let's have a look at what is coming up. Today's PMI data. We've had French and German data come out. We've had the UK data come out. The Eurozone data sent the euro dropping after it was rising. And we've got 11:45 p.m. These are, just double checking. Let me just refresh this. Sometimes it catches me out and changes. So these are Queensland time, 11:45 p.m. We've got the US flash manufacturing PMI. So if you're in New South Wales, it's an hour forward. Then into tomorrow, we'll just cover Wednesday into Thursday a little bit. Tomorrow we've got the Aussie CPI data. So we may be not doing too much on the Aussie today as we wait for this inflation data. We are expecting maybe a little bit uptick on the figure. We'll have to wait and see. Then getting into Thursday on the midnight, we've got the Canadian interest rate decision. If you scroll down through, you'll see we've got the Eurozone interest rate decision Thursday evening. So, and Fed Chair Powell speaking early morning. So, number of high impacting items. Just go to forexfactory.com, set it to your time zone, and work out what's going on. But over the next 24 hours, it's really PMI data coming out for the US and the Aussie inflation data, and then the Canadian interest rate decision. And then, of course, interest rate decision later into Thursday. But I'll be doing a webinar before then. All right, so I'm just going to analyze the charts as though there's no data coming out, but you need to work out what you want to be trading in or not relative to the data coming out. So let's get into the charts now. After quite a slow week last week, I think really we had a bit of a breakout this week. Compared to the US dollar been moving up a little bit. Euro dollar's broken out a little bit above some resistance. So dollar index been tricky because you put in a nice rejection weekly candle here on weekly support. Then had a negative week net last week, and now we're trading below that area at the moment. It's not changing the overall structure of the trend though on the weekly chart. So, don't get too excited at the moment that we're getting this major trend reversal, because trend structure here is up on the weekly. It's just due some form of decline. And when we declined below this high last time, I said we might actually finish up for the week, and we did. So we could be positive by the end of the week. So I'm not getting too excited about the movement down, but clearly we're having a bit of a sell-off. All right, and next key level to really watch is down here at 104,668. All right, so we're seeing a minor downtrend on the day chart at the moment. But, today we could, if we end up closing above this level today, I would expect that this is just coming down to this support area here on these lows. There is a day chart support area here at 105,489. And again, we could be positive by the end of the week. So I'm not getting too excited about this downward move at the moment. All right, so seeing a little bit of a US dollar dip at the moment. SP 500 didn't quite meet the 62% retracement. That's of the weekly range here. We've moved down, got a little bit short of a rally back up to the 62 level, coming back down to test this area of support, but we're putting in a further lower top on the weekly, so I would expect we will break down through this area of support. I'm actually expecting that we could be moving. So we failed here at the 79% level of this range. We could be moving down like so. Of course, we have to break support at the moment, but if we break this level of support that we're at the moment, 41.94, then we could well be starting to see, that was a big move down. This has been a big corrective move up. Are we having a big further move down? So it's not in the best spot to get short. It is in an area of support where potentially, depending on what your philosophy is, I mean, my philosophy is the weekly trend's down, so you should be looking to try and sell some form of rally, but you could be a buyer on support here if you really want to be. Now, at the moment, we've had about 4 days down. It's probably due 1 or 2 days pullback, so I will be watching for that. And there's the daily chart range that we've just moved down to. So, monitoring, we could come all the way back up to 43.14. Old support, being resistance in the 62% area there, and the slightly higher area of resistance there at 43.23. So whether or not we can get up to this area, but that would be the best area to watch for a rally back to, and then a further decline. But really need to, if you're already short, you really need 41.94 to break. All right. Let's get into currency pairs now. The euro dollar spent all week last week, came up Thursday to touch the level I was watching for a reversal. And I actually did get short up there, but I ended up getting at break even. And now we've moved up above that level, but the overall trend from a higher time frame perspective is still down. We've had this very good move down. This is just corrective at the moment, and it's not that easy. Are we going to have a much higher move up, or are we just trying to move above this low here? This is a weekly low, and it's also over here a monthly low. So we're just trying to get above and hold above 106.35 as we correctively move back up the range. So depending on what side of the fence you're on long term, long term that trend's down, but on the day chart here we're in a trend to the upside, and we're actually at the top of I would say, the current fib move. You can see here we did pull back for that higher bottom, and we're at the 127 extension. Now the question is, can we hold above 106.35? So depending on what your preference is to the long side or the short side, so it's two sides of the market. If your preference is to the long side, 106.35, this area here, that should be your area to look for the market to hold at to continue the move up. So I'm not that keen about getting long because the overall longer term trend's down. I'd be much happier to see this close below 106.35 today. And then maybe then tomorrow 106.35 then remains as resistance to move down. So it's just situated itself at the moment in an overextended position when it moved up to there. It's coming back down. Now today it hasn't got down to this level, and I know as we move to a 15-minute chart, the central pivot point pretty much I think where price is. So if price can't get down to, you know, this high here at 106.39 and resistance there 106.35, does that area become support? So that's the area that you want to watch. Does this area become support today, or do we simply move back below? If we move back below, we're probably moving back down long term. So don't really need that fib in there. And well, I've got a day chart high there we can just draw in. It's 106.39. That's probably going to overlap with the pivot point of today. Central pivot points. All right, so that actually overlaps with the central pivot point. So you can see at the moment getting some shadows on the bottom of these candles. So this may only pull back to 106.39 to 106.35 today. That's the area to see if we can pull back to and hold. So that's the buying area if we can hold to trade back up today. If we close below it today, by the end of the day, then I would be watching that area tomorrow to be resistance. So I'll wait and see what the US news brings later in the day. So does this, at the moment, the bias is to the upside. Does that come down, hold support? All right, to move back up. Euro yen. Now, this obviously looks negative after the PMI data from the Eurozone. And there is a question, go to the day chart, which has been very consolidatory for nearly 3 months, but we've rushed up, broke above where we were holding last week, yesterday, and testing this very high level from back in August. You can see we're already negative from that high. And if we go to the monthly charts, squash it in a bit, we are at quite significant high levels. Next major top is over there at 162.42. So there's still a bit of room to get to that level if price wants to get there. But you just need to understand that we are at high levels. There's always that question of intervention at the moment because the dollar yen is just sticking underneath 150. So there's always that back of the mind at the moment, the position of these yen, of some of these high yen pairs, especially the dollar yen. Roger's looking at that level that we might get some intervention. So we could end up with, you know, the weekly chart here, that was actually a lower bottom to that higher bottom. So we could be forming a weekly double top up here. Now we're going to need a bit more information. If we get a really nice reversal candle today, like a dark cloud cover, so we're closing it more than 50% into, at least 50% or more into the body of the day before, that could be the first signal that we're holding there. And then what I would look for is a rally back up. So if we are failing there, I will be measuring that current retracement. Let me do it on the 15-minute chart. Or wherever the retracement finishes today. Let's say this may not be the low of the day, but wherever the low of the day comes in, if we get a reversal candle today, then I would be watching a rally back up inside the candle, ideally at 79% level at 159.71 up to the resistance level. Now, I don't know where the low is going to come in today. So, but I will, I'll be waiting for the reversal candle to finish today. Now, on the other side, this could just be a quick reaction from that high. So depending on what side of the market you want to be looking to trade, you could be drawing a fib across the 4-hour uptrend here. We've already dipped to the 62 level. We haven't been able to pull back to last week's high today on the pullback. is you could be wanting to get long on a setup here. We might come back down to the 62 level and the 159 level once more. So if we can revisit this or close to and hold, there may well be then a move up, back up to retest the high. All right, so there's actually two. Of course, if I'm drawing a fib in there to say I'm going to be selling at the 79% level on retracement, if that's what price does, of course, price has to get up there. So there's two sides to trade there, depending on which way you want to look at the market. I'm actually going to wait to see where the day finishes, to see how the candle finishes. If we get a very nice rejection, then that in my mind will start to maybe think about, are we forming a double top up there, and how can I get in? All right. With it being a weekly double top, there's going to be plenty of time to get in, and I'm going to go through double tops tomorrow and double bottoms in tomorrow's webinar. So we can see tomorrow as to whether it starts to look like a double top or not. It's just a question at the moment. I mean, that 4-hour trend is only just pulled back to the 62% level. You could be monitoring in this area for a trend line break to the upside, and maybe by the end of the day, we're going to be above that level. All right, so what side of the market are you wanting to trade? All right, Euro pound has been trading up. I did say last week, watch this area over here to the left. We have a monthly low over here, 87.21 it is. All right, if we go to the monthly chart, it's this area over here. And the monthly trend is down, lower top, lower bottom. So are we holding there to turn over and move down? And the weekly trend is up, but it's not holding the gain of the week that it was doing on Monday, and 2 weekly highs here that we're failing at. So are we actually topping out up here? So if we are topping out up here, I'd want to see a move back. That's 87 is that high, and that's 87.06. You do a 4-hour downtrend, so 62 levels just beyond 87.06. It's last month's high, so we're false breaking last month's high there. So I would be monitoring to see if this could come back up to that area, 8700 to 87.06. And then can we move down for the next lower top to form on the 4-hour? All right, so can we get a rally, another failure there at that weekly resistance area? Of course, it tried to move above last week. It's been trying to get above this week, but it looks like it's maybe failing. All right, pound dollar. If I click on the right one, sorry, pound dollar. All right, so the pound dollar is looking a little bit different to the euro dollar in that it hasn't moved up to a higher high here. It was very slow going last week, sitting on and at around 121.10 to 121.100. And we are showing some form of rejection here on the candle at the moment. Will it look like that by the end of the day? We'll have to wait and see. But yeah, if we see a rejection candle like this one over here form here today, I would expect this to be moving back down to 120.100 now. You could be wanting to maybe engage at this level today and a retest. Maybe this is going to hold and form some kind of left shoulder head, right shoulder here. This looks like it's a bottom, higher top, higher bottom, but there are actually two bottoms there. So that's actually a lower bottom to that bottom. So this could be left shoulder head, lower bottom moving up to form a right shoulder here. If we draw a fib across that range, then you can see we've hit the 79% level today. So if you are wise to maybe this being a left shoulder here, that being your head, and then looking for your right shoulder here. So the levels could still get retested today when the US news comes out. I know the 4-hour candle at the moment is dropping down, but 2271, 122.83, that area there is the area to watch for a retest. Can the market come up for a retest there? All right. It's the 15-minute chart. All right, I might just redraw that. All right. Wherever this puts in a low at the moment, you could be looking for a little retracement. 60. Now, if that is a low and we're going to pop back up, 62% level overlaps with your 2271 level. So are we topping out there? You can watch for yourself there if you like the idea of that going to the short side. There's, about 150, approximately about 150 pips from that level down to where support has been through last week. Pound yen. Now we're already having a week up this week after being very consolidatory last week. So if you go to the weekly chart, we're, negative candle, down candle, but positive by the finish last week, and then we're up this week. Are we going to be fading up here, or are we going to break up and through? It's not that easy to determine. I mean, that could be a left shoulder head, right shoulder here. Or are we breaking through? We've had a nasty reversal up on the candle, last 4-hour candle. So if you are anticipating that we could be, this could be a little double top, or we're breaking through. So you've had quite a negative candle on the last 4-hour candle. So clearly selling pressure is coming in from that high there. Just going to drop to the 15-minute chart. Again, like I was just showing on the pound. If you think we're topping out here, you could just be looking for this to come up for a 79% retracement of that drop. So you're waiting for price to move back up inside that rejection candle that we're seeing on the 4-hour chart, just short of resistance. And, you can get a very tight sell up here if it gets up there. That's at 183.57. And, well, you wouldn't need a risk more than probably 30 pips for, a large potential gain if you're on the right side of the market. All right. Now, if you want to get to the long side of this pair, broken above this area here, 182.80, that's your level of support to look for. All right, depending on what side of the market you're on. It's a little bit difficult at the moment. The day chart trend has turned to up, but this weekly picture here at the moment with a negative candle here, 2 weeks ago, we're still inside that range. So really, until we break above that high, there's every chance we could hold there and simply move back down into the range. So it's not the easiest at the moment. You can see a couple of weeks, week and a half in here, it was just consolidatory. And I do note, because I had a fib drawn in here before, this was a range of last week. And we popped up just short of the 162 extension of that breakout, which then overlaps with this high over here. So we are overextended here. We could see at least a pullback to 182.80 before then maybe the market wants to move back up. So, I'd actually be monitoring that 15-minute retracement. If you could, see this start to hold there at the 79% level. If price breaks to the downside, you can get your risk out, and then you can see whether the market wants to break below at 182.80 support. All right, just getting to Aussie yen now. Aussie pairs, we have the CPI data coming out for the Aussie tomorrow. Inflation figures. It's not the wisest, I don't think, to be just taking a position. Aussie yen at the moment is very hard going. You can see it's forming some kind of triangular pattern of sorts. If this could break either way. All right, so as we're trading up tomorrow, I think I would simply be watching where resistance is. This is a weekly resistance area up here. daily resistance there, another high there. So I would just be watching up here tomorrow, waiting to see if the data just spikes up there. And if you look at this range that we've got in play here too, coming up to 96.09, if we were to spike up, overlaps with that. 2 weeks ago when this was coming up here, I was saying, could we form a left shoulder, head, and then a right shoulder at the 79% level? That could still happen because this has just been sideways ever since. It came up short, held at this area over here, but never quite got up to that left shoulder. All right, that's at 96.06. 96.09 is the 79% level. So, two areas that you could watch the price to come into tomorrow after the data. And then see what happens. All right, Aussie at the moment, getting very range bound as well. It's kind of got, but this could put in a higher bottom here to these bottoms, but you can see we've got a series of lower tops. So what I've noticed, we are coming back up to weekly lows, 63.57 to 63.64. We've been zigzagging above and below. Maybe this week we're just going to come to those lows more closely and hold. What I have noticed is we're just in the range of last week. This is the range of last week. It's to there, then we've just dropped down, so we are having a down week. And we're at the 79% level of that range. So there is a larger range here. So I'm just looking at what could happen tomorrow when the data comes out. There's a larger range here that you can monitor too. 64.10 up here. Because when we traded down here and then we traded up, we haven't actually broken this low. So we could still come up above this high and still keep within this range. And still a little bit of an imbalance in here that hasn't been filled. All right, so 64.10 is 79% fib. And you got the 64 level just below it. Pretty much at the top of that imbalance there. So this would be a really nice area to watch tomorrow if we can spike up. Other than that, like I was saying on the Aussie yen, I will just wait to see if price could spike up to a higher level. That's the way price is moving at the moment, is up. All right. Let's just see what that euro dollar's doing. Not quite got down to that central pivot point yet. And there's pound, right, New Zealand yen. We just look at the higher charts, the monthly chart, we're at very high levels. That's why this is really struggling to maintain its gain. But the trend is up on the monthly, but you see the monthly candle, it's not holding last month's gain. It's negative. So we are at high levels. Weekly trend is up here, and depending on your positioning, how you want to position yourself if you trade this pair. This is in an uptrend on the weekly. Of course, it's been false breaking, but we're kind of in the 62 to 79% area there. This could put it at a higher bottom here to have another go up from a higher time perspective. That could be what's happening here. And you can see here, these three candles, last 3 trading days, have all been holding this kind of support area here. So it does make sense that this could get support here. All right, in that area there. To have another go up here at the highs. And, you could call this as well the bottom of the range. I've put a horizontal line and it never works very well as we're using one of those lines. So that lows at 87.014. All right, and then the top of the range is up here. So if you want to trade like it's a range, let's call the top of the range just there. And we'll call the bottom of the range just there. Is we may still have a go down at testing 87.01. So for me, this is very strong support here. So trading it as a range. So your range is like so. Being a buyer, 87.01 plus the spread. So about 87.03. Stop goes down at 127R. And then you're targeting up here at either 89.68 or 89.91 up there. All right. That's if this is going to hold into a range. Comes down, can we then trade back up to the top? Now it's gotten a little bit short. Maybe it's already bombed. So you'll have to monitor price action. So can we come down for another test? Let's just have a look at the 4-hour trend. Now 4-hour trend is still range bound here. If it did start to show an uptrend, I mean, if we could draw a fib, a little fib from a higher top, that would be great, but we can't at the moment. So if we could, then you could look for a 79% retracement to trade up. At the moment, we've got equal highs, so I would just be waiting to see. First of all, does it go up to a higher top so you can draw a fib in to show a true trend? Or does it simply come down to actually test 87.01 and can you trade there? All right, that's actually false broke last week's low. So you could actually, last week's low 87.11. So your area is really 87.11 down to 87.01. If you can get a retest down in that area, that's the area for support at the bottom of the range, I think, to trade back up. All right, now New Zealand dollar. Now I discussed this double top last week. So if you were in last week, what I said was, can we break below 58.70, that low there? The double top price rejection is down here at 56.92. So let's just draw that in. There's the pattern. Now that we've broken the midpoint should be resistance to trade down from. So you've had the opportunity today to trade at 58.70 to try and get short. So there was your opportunity there. Might give you another opportunity, but you can see that those two 4-hour candles are showing rejection in that area. So that's where the sellers are coming in. Buyers are, or the sellers are letting buyers come up, but then they're taking control the tops of the candle. So, you know, 58.70 is really where you wanted to try and engage today. Well, then you might get another opportunity. The actual target for the double tops down here at 56.92. All right, now if this continues down, then it actually goes against what I just said on the New Zealand yen. So I think it's worth, you know, if you're wanting to trade, maybe this is a bottom down here on the New Zealand yen. What you need to see is the New Zealand dollar moving above 58.70, because if this is going to hold here to move down, the New Zealand yen is probably going to break support. So you got to look to see what both pairs are doing. Don't trade one in isolation, or don't trade the New Zealand yen in isolation, because if this is moving down to 56.92, I would probably say this New Zealand yen's breaking down through this area here. So, well, of course, the yen could get way extremely weaker if we get a clear break of the dollar yen above 150. But looking at those two pairs, if I had to trade one of those pairs, I would probably look at the New Zealand dollar for that trade down and leave the New Zealand yen alone. All right, dollar Canadian. It's very difficult for the pair at the moment at that 79% level and the weekly high here. that 79% range, or the range is coming from the monthly chart. It's coming from that range there, from lower top to lower bottom. Now I could just be pausing here before breaking higher, or it's failing there. It's going to be obviously doing one or two things. Weekly trend, last 3 weeks we're inside that rejection candle. Struggling at this weekly high. There's more weekly highs to the left. So the question is, are we topping out there? Of course, this is probably not going to go too far. We have the interest rate decision midnight my time, Thursday. Interest rate statement, not expecting a change, but you never know. There's definitely going to be a reaction from that. So this pair will probably not do too much until we get past that event. All right. Really, I said this last week, if this is going to move higher, it needs to have a good close above this 136.94 level, pretty much the 137 level, and it to become support. It's not, over the last 2 days in any event, it's not offering support. It's actually slightly below, but you can see it's not really going anywhere too much at the moment. It's just treading water. So I will just wait past the interest rate decision. But your key reference level is that weekly high here at 136.94. Are we able to start to move above it, or do we drop, nicely below it and come back up to retest it, maybe to be resistance? That day chart trend though is still, higher bottom, higher top. We could be putting in a higher bottom here to move up, but it's difficult to trade that ahead of the interest rate decision. Dollar franc. Now we have a couple of trends in opposition. The monthly trend is down. We're holding at the 79% level, lower top, lower bottom. Are we putting in a significant top here? Or is this weekly trend, which has moved to a higher top, going to prevail? At the moment, this week, this area here where we heavily drop down and then totally reclaim back, is that going to form some kind of, it's not textbook, but is that some form of left shoulder, inverse head, right shoulder here? That was a complete false breakthrough there, all the way back up to a higher top. So is this support to move up? That's what I'm thinking. Especially if the Eurodollar false breaks 106.35 this week. Let's say today we close back below 106.35. This is going to be moving up from this level here in all probability. So you can see we're having a reversal day. We've had a fresh low. We can't hold below that weekly low there at 89.01. So I'll be just watching the 4-hour chart there. Does it break into 4-hour uptrends? Does the structure change? Because if it does, then you may see price come up to a higher high over the next 12 hours. And then can you see a pullback to maybe a 79% level? And that could be a little left shoulder. That could be an inverse head. And can we form some kind of price pattern where we form an uptrend, come back down for a retest and hold, to then want to move up? All right, so asking the market to show some price action that starts to prove that we've hit supports and maybe we're wanting to reverse back up. Slav, can you asking me, can you call a false break if it's been going on for a few weeks? Yeah, you can have multiple weekly candles false breaking a level. So yeah, if we're talking about the dollar Canadian, if we go back to, if that's the one you're talking about, from a weekly perspective here, I mean that one candle is the false break. We did close above it last week, but those two candles couldn't. So it doesn't really matter if we're false breaking that or not. The question you have to ask yourself is, if you go to the day chart, is that what you want to buy right now? which is resistance, and now you say no, you're saying dollar franc. So you're saying, can you call a false break if it's been going on for a few weeks? I'm not quite sure of your question, Slav. We're talking about the dollar franc. Are you talking, what time frame are you talking about the false break? Oh, you're talking about this here? Well, to me, that's a false break because from a technical perspective, see here, we had we had 3 candles here holding, and then we drop. So what happens here is we drop, and I know we got all these candles below, but we drop and create an imbalance. So that the whole imbalance that we form here, when price then comes back up to completely fill that. Now, if that's not going to be a false break, price will come back up to fill it. All right, so it comes back up to fill the imbalance. Is if it's not a false break move down, that would then go like so. Now it doesn't hold there to then move down, so top of the imbalance doesn't become resistance. Price moves back above. So now, whether we can class it a true false break, because of course there's lots of candles there. It's probably not shut, it's a weekly chart as well, but it's a complete imbalance that gets formed here. So I think through this area here, lots of traders were getting long, and then this comes down and through, and they find themselves wrong. And so, there's lots of clearing of positions, but nobody's really taking positions to commit furthermore down to the downside after those positions are cleared. And that's why this thing comes back up. So whether or not we can, class it as a true false break, but if we go to the monthly chart, we don't see a candle false break on the monthly chart. Well, we get a clear false break of this low here, potentially. So I just think it's an area where we've rushed down and through. You can see it there on the day chart. We've rushed down and through, and then we claim it all back. All right. And really here, see this. This is quite an impulsive move up here. And really over here, we've just come back to the start of the impulsive move. A little bit sideways here, and where my mouse is, that's where it really started to go back up, and that's where we pull back to. So I think we're at support there, potentially. It's just, again, as I was on the 4-hour chart, it's just a question of, can it start to prove a change on the 4-hour chart there? So you can monitor that. All right. Dollar yen, tough going on the dollar yen. It just does not want to be above 150. We've only gotten up to last week's high was, well, we didn't actually get to 150 last week. So 149.98 on my charts, or almost 99. All right. And we actually have turned down here on the 4-hour chart. So if you're wanting to try and get a tight entry from this area to the short side, well, I'm pretty sure clear the bodge is watching. You could be looking. Let's go on my 50-minute chart so we can. Yeah. So 149.84 up here, 79% level. You'll have done the range to the upside today if we get there today. So today's projected high is at 149.81, 149.84. If you're wanting to get short this because of everybody's concerned about intervention at 150, it's 4-hour charts turned down. So this is the downward move on the 4-hour chart to a lower bottom. Is it going to come up and put a lower top in this area to then move down? Of course, you want to be getting your stop above 150 a little bit. I know I'd probably say get at least 20 pips above 150 for a stop. All right, let's just finish with gold. So Slav, you're asking me who's driving it down. Well, the bodge isn't coming out and saying that they're intervening, but we keep seeing, if we go back to the dollar yen, we keep seeing some moves. There was a bit of a move here. There was a move here last week. Now, there's some very horrible candles on the 50-minute chart. Next week, I think next Tuesday, let me just double check. Next Tuesday, we have, I think it's next Tuesday. We have the monetary policy statement from the Bank of Japan. So for those of you who may remember last year, I think one of the monetary policy statement days, we actually got intervention pretty much after the statement. So, we're just sitting under 150 leading into that next week. Could be fireworks. So Miriam, you asked me about 9 EMA and 200 EMA on a 50-minute chart, considering the concept of a death cross. I wouldn't use it as a trigger to get in, but you could use it as, if you're wanting to use it as a trend mechanism. So I'll put that on the chart in a moment. We can talk about it. So I'll get back to your question in a moment, because I've got another question about the yen. So Lachlan asking me, does the yen strength ever overpower the dollar strength? I.e., can dollar yen ever go down when DXY is going up? Yes, it can. It can in times of risk off, like say through the GFC, for example. So if we're having stock markets heavily selling off, dollar tends to strengthen, but the dollar yen will either tend to go down or go sideways. So yeah, the dollar yen can go down, even though the US dollar collectively, or the DXY collectively, is going up. And Azu, you're asking me Aussie dollar level, and do you think we are reversing trend? We'll have to wait till the CPI data comes out, I think, to see whether we're reversing trend. We've actually got kind of equal bottoms and lower tops, so it's a little bit difficult at the moment. It's all going to be based around the CPI data. If the CPI data comes out high tomorrow, the market's going to anticipate maybe we're going to get an interest rate decision for the Aussie, and then the Aussie dollar will probably go up. If the CPI data comes out tomorrow slightly weak, then the market may then anticipate we're not going to get an interest rate hike, and then the Aussie dollar may go down. But the Aussie dollar itself at the moment is not easy. It's quite choppy. And Slav saying, if you had one pair to sell in GFC, would it be, pound yen or euro yen? They were kind of moving 500 pips. I don't really trade the pound yen myself, but yeah, I know the euro yen was trading like 500 pip days. Pound yen's probably slightly larger, in the GFC. All right, I'm just going to have a look at gold, and then I'll get back to the question on the 9 and 200 EMA. So let's get to gold. So just on the weekly chart here, we've of course brushed up with the geopolitical environment in Israel, but there's always the question here, are we creating some form of double top? We've got this potential triple top across here, and this is rallied to a 62% area of that drop. So, we're kind of in a sell area here at the moment on gold. And really, up here was the best area to start to maybe look for an opportunity to sell, as that rejected. So at the moment, the big question on gold is, has this now done its run in terms of pricing in the geopolitical troubles? And is this now going to move back down the range in the short term? So, you know, trading headlong into this area of resistance isn't great. And I'm sure traders that got long up through here are taking profits here. So just move to the 4-hour chart. 4-hour chart here is starting to turn down. But from a trading perspective, it would be nice to see this come back up and retest 1987. And then what does it do? So, if I was wanting to trade gold, I think what I'd like to see is price action break this low. So we ultimately have a range moving down like so. And then do we come back up? Does the 7% level overlap with the weekly resistance level? And do we come up for another test of the area? And does it turn over? Now, from an upside perspective, if we're going a lot higher because of the geopolitical events and the day chart is just showing you some corrective pullback, your buying levels down here at 1947. So do we come down to here for some form of correction before then moving up higher? So you can see at the moment, there's your resistance, there's your support, and you're pretty much sitting in the middle. So it's not sitting in the most perfect position at the moment to try and get a trade off. You either want to look for this to come up close to 1987 and hold to then, a lower top starting to form a trade down, or you're looking for this to come down and support and hold to get a trade off to trade up. All right, so it's right in the middle there. It's not ideal, right in the middle. All right, so you're talking to me about the 50-minute charts on gold, 9 EMA and 200 EMA. So we're on gold. So those, if you wanted to trade the outskirts on gold, those are the outskirts. If I put the moving average on, I might go, I don't know, green. So you said 9 and a 200. So the point I was making before was if I was trading some kind of death cross or golden cross, and Tim, you're saying the middle also offers support. Well, if we are in between resistance and support, price can, yes, stop in the middle, but it's not the best technical level. All right. But I mean, if you want to trade in the middle, that's fine. But for me, if I'm seeing an area of support and resistance the market's operating in between, then I would look to trade from support up or down from resistance. All right, back to the 50-minute chart. Now, of course, so you've got this cross here. I wouldn't trade the cross per se, but if you're wanting to use the 200 EMA now as often what happens, you can see it here. See the trend. If we use these two EMAs for trends, so the small one's above the bigger one, so that to me tells me that my EMA trend is up, and the 200 EMA on any time frame can be support. So you can see it being support here, 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 here to move up within the EMA trend, because the shorter term EMA is above the longer term. Once you get across down, I would then look for the 200 EMA to be your resistance point. All right, so I wouldn't use the crossing of the EMAs to be the trigger to go and do a trade. But now I would anticipate that intraday, the 200 EMA could be resistance. to move down. That's how I would look at a 200 EMA moving average cross, using it as a trend. All right. And if we just spend a minute just scrolling backwards in time. Now, sometimes price doesn't get to the 200 EMA. You can see it here. In a very strong trend, it won't get back to 200 EMA. But if we just scroll back and have a look at some of the price action, where it was a little bit less. So like, see here where we actually, the problem with crosses is sometimes it crosses down and crosses back up and vice versa. Quite quickly. Here we get a cross down, so that's the goal. That's the death cross. Crossing back up is the golden cross. So you can see that once we did get the cross, price did come up to be resistance to move down here, but then ultimately pop back up. Once we got the cross here and price went up, it did pull back to the EMA before moving up. So you might see this happen today, but the opposite in terms of, because we've had the cross down, the EMA may offer resistance today for a trade down. So that's how I would look at trading an EMA based around the 200. Okay. Hopefully that helps you there, Mirren. Now, I mean, you could trade the cross if you wanted to as a trigger. I mean, that would have crossed on that candle just there. So you could put your stop above there or above there for your trigger. But a long time ago, in my earlier days of trading, I used to have a 200 EMA on my 50-minute chart. I think I used to use a 30 and a 200. So if the 30 was above the 200, that was an uptrend. If the 30 was below the 200, that was a downtrend. And I would look for price to be pulling back to the 200 EMA to be support or resistance in line with the trend. So it does work well. But of course, trading that kind of strategy, you're of course waiting for price action to pull back to the 200 EMA. And sometimes if you get a very strong trend, well, price is never getting back to your EMA. But that might offer you that. That's how I will trade it if you wanted to trade it that way, personally. All right, just make sure I've got all my questions answered. Just go back to your question, Slav. I did say, I don't know if I quite answered your question about, through the GFC, one pair to trade. You're asking me pound yen or euro yen. The problem with those pairs, when you're getting 500 pip moves in a day, is it's not like they start at zero and then through the day move 500 pips and never pull back. It's like it moves 500 pips, then it pulls back 300 pips in the same day. So whilst it sounds good because they're moving 500 pips, you think I'm going to make 500 pips. They can move down 500 pips fairly quickly, and then they can move up 300 pips fairly quickly in a couple of hours or so, or less. It can be highly volatile. So just because they obviously can move a long way in those very volatile times, sometimes it's better to be trading something that isn't moving quite as aggressively because you don't have that volatility and less chance of getting stopped out. Because when something's moving down 500 pips, it can for sure then move back up 1,000 pips. Because at some point within the volatility of those very large moves, what moves strong one way can move strongly the other way. It's usually when you're in the extremes of price action, when you get in those kind of ranges, something's happening in the market. And then quite often a government can come in and do something to try to support the market. And if you're getting in the wrong spot, maybe on the day where we bottom, that can be very difficult. It's like what I've said before is extreme moves. When we're starting to get extreme moves in the market, like 500 pip days, we're usually getting to the end of the move. Or I'd like last year on the pound dollar. it's not the start of the move. So where I've had very good successful moves is getting in the early start of the move when you're just getting normal trading days. Because when you start to get the aggressive 500 pip days, that's usually the end of the move. You may get 1 or 2, 3 days of those moves, but you're getting to the end of the move. So usually I'm not getting in on those days. I'm just trying to do my best to get out if I'm in and maximize my profit and not get in a position where the market quickly moves back the other way and I lose all my profit. Timothy asked me about the pound dollar. We've already covered the pound dollar, but let's quickly cover it. Pound dollar, as I was saying before, go to the day of charts. Are we maybe forming some, it's not perfect, but are we forming some form of left shoulder head, right shoulder here? We've touched the 79% level today. You know, if we show a rejection candle today, like we showed a rejection candle over here, are we going to be coming down, back down towards 120, 100 this week? And then I was saying, you know, if we are failing up here, we may get a short-term rally here on a fib, back up into the resistance area. All right, that's my thoughts on the pound. All right, that's enough for me today. If you have the time tomorrow, I'm going to be going through, let's go to the webinar page. Tomorrow on the webinar front, I'm going to be going through the double top, double bottom pattern. And there's the question, maybe the euro yen could be forming a large double top or moving through, so we can review that tomorrow. Lachlan is saying euro dollar may be moving below resistance as we're winding up. Well, it could. Well, it's down on, it's right on the support at the moment. 106.35 is your support line, where we're at right now. So if this shows some form of reversal here today, this is where the buyer should get supported if it's going to start to head up. So if you start to see a reversal here, this could trade back up to the high of the day. But if we close below here today, then that area could well be resistance tomorrow. So it's not looking that strong there at the moment, is it? But that's where, if you want to be a buyer, you're looking to trade to the upside in this pair. You're looking for this to start to hold here. Can you see some form of maybe trend line break to the upside to get long? If it breaks below today, you're probably looking at that area to be resistance tomorrow. All right. Okay, on that note, thanks everybody. Look forward to seeing you next time.